Welcome back, traders, to another ICT lecture. This is the NASDAQ AM session review for May 5th, Cinco de Mayo. Now, I remember this day was very choppy. I did do a few trades, took a couple losses, then mitigated for a small red day. So as I'm watching this lecture, I'm thinking to myself what I could have done better. You're going to take losses, that's just how trading works, but don't get angry and depressed with your losses and then just brush it off and forget about it. Look at your losses as a learning opportunity. You need to review your losses and figure out what you could have done better or what you can improve on going forward. So I'm going to take this chance to see what I can learn and share with you any of my key takeaways.
All right, so we're looking at the daily chart here, and I want you to take special note of how Thursday created a premium wick that got blown through on Friday's non-farm payroll. And then we opened here and traded down into Friday's range. But I teach you to use these wicks like gaps. Okay, so we're going to zoom in. I'm going to lay the Fibonacci across this here. Be mindful of this high and this wick. That's what we're going to be drawing attention to. All right, so here we have Thursday's price action on the daily chart. I have the lower quadrant, consequent encroachment, the upper quadrant, and the high of Thursday's wick, and the low of the wick. In this case, this is a down close candle. It's the opening price. So those four levels here, and then we have, actually it's five, isn't it? 1, 2, 3, 4, 5. Check my math there. Having a senior citizen moment. And then this up here. So longer term, until proven otherwise, the draw is here. And we're going to look at how price used that consequent encouragement level. The midpoint consequent encouragement level of that Thursday premium wick, now acting as a discount array, is 19,980 even. Okay, so just be mindful. When we see that line in the lower time frame charts, it's this wick's halfway point or consequent encouragement. All right, we're in a 15-minute time frame. I mentioned on Telegram that a 15-minute buy side was a draw. And you can see how the market dropped down and spent some time at that consequent encouragement on Thursday's premium wick. That is now, because we went above it on Friday, becomes a discount wick. So we traded down into it, consequent encouragement, hits it here, back and forth. Really, really lots of high resistance liquidity run signatures in here. Look at the back and forth price action. But ultimately, it did get to our objective here. But just be mindful that 19,980 level was hit earlier. And now we're on a 1 minute chart. So here's that same level, the consequent encouragement of that Thursday wick. And because it hit it earlier, prior to 9 o'clock in the morning, you can see that on your own charts, we had all this price action back and forth, overlapping previous ranges, just to climb back above to get to that 15-minute buy-side liquidity. So I want to take your attention to a very specific pool of liquidity I mentioned on Telegram for sell side. This is the only sell side liquidity pool I mentioned. And this was the initial one I told you about. So relative equal lows, real easy, right? Real easy. Now, why did I go back further than 9 o'clock? Because this is the first one I'm going to come to. And we've already worked several lows in the pre-session. And it's just cleaner. It's easy here. It's a Monday. And we had a high impact news driver at 10 o'clock. And we came down already earlier in the sessions to trade into that consequent encouragement level of the Thursday wick. So we went down below it, swept it, and then I drew attention to this candlestick being the first percent fair value gap and this volume imbalance.
So why this volume imbalance? Well, much like the first presented fair value gap, this is the first presented volume imbalance after 9:30's opening bell. So this could be of some significance, although I don't really see it here, except when we return back to the first presented fair value gap, it did wick into this volume imbalance before running away again. But I don't know. Let's just see what ICT has to say.
Zoomed in here. There's that volume imbalance. Here's first presented fair value gap. And after cleaning the relative equal lows up with this stop there, we ran back above this SIBI, which we're bullish. We're looking for 15-minute buy side, higher prices. We went above it, trade down in. It left it. See how I did that right here? Now, when we trade back up higher, it should not go back down in the lower half before running to buy side. So we get it on this candlestick right here, and I'm aiming right for that volume imbalance right in there. And I'll show you the execution. Here's the candlestick, and there is a little indication that you're getting long or short. In this case, it's a buy there, and then it rallies up into the 15-minute buy side. Now I'm going to put my cursor on this little arrow, and you'll see the little caret symbol appears right there. Okay. So there was no other trades. One of my students facetiously said, show the short you got to stop out on. No shorts today. So it dropped back from there all the way back down to first percent of fair value gap, banged around a little bit in here. Failure to get back above that 15-minute high. That was the buy side on my trade. And I mentioned on Twitter, look at these lows in here. That's retail support. And it broke through that down into first percent of fair value gap. And I told you to watch that there. And then it rallied up and took out the high here. And there's the business for today.
All right, so this one was short and sweet, not much fluff at all. So I did think about taking a long at this fair value gap, but I didn't like how he had already taken a short-term buy side. So I was waiting for a confirmation fair value gap, which we got right here. Unfortunately, we never retraced back into it for me to enter. And I thought about taking this one as well, but again, I didn't like how we had already taken buy side once again. So I was waiting for like maybe a deeper retracement back into here. But we did rally back up, and once we took out the buy side liquidity here, I thought my opportunities for longs were over. So I turned my attention to the sell side and I shorted this fair value gap for a loss. Then again, I flipped long on this fair value gap thinking we could take out this high, took another loss, and then I was pretty much done for the day. And even though we created relative equal lows, once we rallied back up and had a change in the state of delivery here, I went ahead and tried long one more time. Now, I don't remember if I entered on this volume imbalance or if I entered on this volume imbalance, but it was one of these. And then I went ahead and just took it off above this high just to mitigate some of my previous losses. So looking at this now, I'm not sure what I could have done better to improve on. Maybe I could zoom out to a higher time frame and see the buy side liquidity, so I wouldn't be so bothered with all these short-term buy side getting taken. Or maybe I shouldn't have traded today at all. If I saw it was very choppy and unclear to me, maybe I just shouldn't have touched it at all. I don't know, but I'll open up the comments here for just for you guys, just to hear what you guys have to say. But that's gonna be it for me today. Hope you guys did better than I did. Hope you guys got something out of this video. But make sure you like this video and subscribe if you haven't. And until I see you next time, safe trading.